Oracle, a major force in cloud and AI, has just unveiled its latest earnings report, sending shockwaves through the market. With insights into the booming semiconductor and AI sectors, this is a must-watch for tech investors. Today, we'll unpack the numbers, market reaction, and what it all means for the future of AI-driven infrastructure. From record-breaking AI demand to strategic cloud partnerships, Oracle's story is one of bold growth and innovation. Like, subscribe, and stay tuned as we dive into the trends shaping the future of tech and investment opportunities. Today, we're diving deep into Oracle, a key player in cloud infrastructure, which recently released its earnings report and shared updates on its standing in the semiconductor and AI industries. For those unfamiliar, Oracle is a major force in the cloud services sector, and its earnings give us valuable insights into its role in these rapidly expanding markets. We'll break down its earnings results, the stock's reaction, and my overall analysis. Oracle's stock took a 7.8% hit, equivalent to 15ers, following its earnings release. The decline came from a revenue miss and weaker than anticipated forecasts. While the numbers weren't disastrous, the market's reaction was sharp. Oracle operates in a dual-mode revenue structure with a fast-growing segment like infrastructure solutions and weaker performance in its legacy operations. Despite this setback, Oracle's stock had been up over 83% year-to-date before this drop. It's worth remembering that Oracle remains one of my top 3 stock picks for 2024, alongside NVIDIA and CrowdStrike. At these levels, I wouldn't recommend aggressive buying, but suggest a cautious dollar-cost averaging strategy for long-term investors. Switching to NVIDIA, earlier today, I discussed China's antitrust investigation into NVIDIA's practices. While the news may sound alarming, I see it as a short-term disruption rather than a fundamental challenge for long-term investors. NVIDIA's stock fell 2.5% during the day and another 6% after hours. This drop, like Oracle's, creates an opportunity for small, calculated investments in a volatile but promising market. Meanwhile, Oracle's management shared optimistic projections, expecting their cloud revenue to reach $25 billion this fiscal year. This is driven by their position as a preferred provider for AI workloads and their strong partnerships with major players like Microsoft, Google, and AWS. They also reported $97 billion in remaining performance obligations, reinforcing the company's growth trajectory. Demand for Oracle's AI-driven services has been extraordinary, with infrastructure revenue up 52% and cloud service revenue growing 55%, now reaching an annualized $9.7 billion. Oracle continues to advance its AI capabilities, delivering supercomputers with up to 65,000 NVIDIA H200 GPUs. This establishes Oracle as a significant force in the AI and cloud industries. While Oracle reported negative free cash flow this quarter, their trailing 12-month cash flow remains in the positive. Additionally, their announcement to double capital expenditures in fiscal 2025 compared to fiscal 2024 highlights their strategic focus on long-term expansion. Oracle has also established key partnerships with OpenAI, xAI, NVIDIA, and Meta, emphasizing its role in powering large-scale workloads. Even these tech giants, which have massive infrastructures, turn to Oracle for additional capacity. This reliance underscores Oracle's competitive edge in providing scalable and cost-effective AI solutions. Notably, Oracle is also exploring AI applications in healthcare, a market with significant potential. Their expansive data centers, which range from 50 megawatts to an impressive 1.6 gigawatts, are critical to meeting the surging demand for GPU-driven AI workloads. During the earnings call, Oracle's CTO addressed concerns about the sustainability of demand for AI training workloads. He assured investors that demand remains strong, though he highlighted networking as a potential bottleneck. As GPU clusters grow larger and faster, networking infrastructure must evolve to keep up, preventing GPUs from sitting idle due to data transfer delays. NVIDIA is proactively tackling this issue by advancing its networking solutions alongside its GPUs, CPUs, and DPUs. This multi-pronged approach ensures they maintain their dominance in the AI hardware space. In summary, while Oracle's stock decline may cause concern for some, the underlying fundamentals remain strong, driven by robust growth in AI and cloud markets. For both NVIDIA and Oracle, current price levels offer opportunities for gradual, incremental investments. Don't forget to like, comment, and subscribe for more. See you in the next video.